Hey everyone, this is Charlie Shrem, and you're listening to Untold Stories. This is a show where we dive deep into the lives and personal histories of some of crypto's most influential leaders and find out how the crypto movement truly came to be. Let's dive in. On today's show, I interviewed Danny Kim, who's the head of growth at the San Francisco Open Exchange, SFOX. The San Francisco Open Exchange is a crypto prime dealer for whale traders that's connected to 8 of the world's biggest exchanges. And they've quietly performed over $11 billion in transactions since like 2012, I think, when they launched. And it was such an amazing interview that we talked today. We discussed things like why he left his cushy banking job for the crypto Wild West, why segregated accounts are crucial for mass adoption, what is a prime dealer, and some other funny stuff like why Danny likes jamming out to Taylor Swift and Kelly Clarkson. He brews Korean liquor, he loves chilling with his cat, and chatting with the neighborhood squirrels. It was such an interesting interview because Danny's really been around the block. He's worked at State Street and BNP Paribas Bank. He's worked at itBit since 2014 in the crypto space, worked at Gemini, and now working for SFOX. Enjoy the interview, and I'll talk to you guys right after the ads. I'm so honored that Untold Stories is sponsored by eToro. eToro is the smartest crypto trading platform and one of the largest in the world with over $1 trillion in trading volume per year. What I really love about eToro is that the CEO has been around the Bitcoin space since 2012, so they really put their money where their mouths are. US customers, myself included, we can trade the most popular crypto assets, in fact, almost all of the ones that you want to trade, with low but transparent fees. So you actually know what you're paying for everything. And that's really important. So if you're not ready to trade yet, you can practice building your portfolio with the eToro $100,000 virtual trading feature. So you can create this whole portfolio without trading with any real money to see how you'll do. And you can learn all the different ins and outs without using any real money yet. And then once you're comfortable, you can enter the market and start buying and selling crypto for real. Best of all, one of my favorite features is that you can connect with 11 million other eToro traders in the world, myself included. And we can talk trading, charts, and all things crypto. So listen, head on over to eToro.com, links are in the show notes, and build your crypto portfolio the smart way. This episode of Untold Stories is sponsored by Scott Offord, the creator of crypto mining. Scott was my first sponsor for Untold Stories and really called me up and said, Charlie, I love what you're doing. I really want to sponsor your show and further the education. Scott Offord is the super czar of crypto mining. He's a broker of ASIC mining gear, helps people buy and sell their miners. So if you want to buy mining tools, if you want to buy miners, if you have any questions on how it works, if you want to sell your miners or even just broker them, Scott is the guy to call. Not only that, but he created a free Bitcoin mining profitability calculator at cryptomining.tools. That's the website. And it also has an interactive ASIC hardware comparison chart. What that means is he has all these different fields where you can enter data like, the cost of your miners, the cost of your electricity, and it takes in things into comparison like the impact of the Bitcoin block reward halving, and it gives you things like how many days until your return on investment? Is it even profitable for you to be mining? All these other type of information, which products to get. It's your one-stop shop for learning how to actually mine for Bitcoin or any of the other altcoins that have mining built in. Give Scott a call, send him a message. You can follow him on Telegram and at Twitter at OffordScott. That's OFFORDSCOTT. Of course, the links are in the show notes. Untold Stories wouldn't be here without the amazing production company Blockworks Group. A few months ago, I approached Blockworks Group and I said, hey guys, I want to do a show, Untold Stories. Can we make it happen? And these guys are the only event and podcast production company that I trust. Really, the show is powered by them, and it wouldn't be here today without the amazing work of the Blockworks Group team. So for access to all the premier digital asset conferences and to check out their other podcasts in their network that they produce, check them out at blockworksgroup.io. That's blockworksgroup.io. I promise you will not be disappointed. I'm very excited that our guest is here today. His name is Danny Kim, and he is the head of growth at the San Francisco Open Exchange. Is it San Francisco Open Exchange, SFOX? Is that what it stands for?
Yeah, it stands for San Francisco Open Exchange, but we call it SFOX for short.
SFOX. Okay. I want to give everyone, and you're coming to us from a phone booth in San Francisco, so I'm very happy. Thank you for doing that.
Thanks for having me.
I want to give everyone a little bit of a background. Like let's take a step back and crypto, Bitcoin, Ethereum, like in general, the space is almost a decade old. Like we've been here. It's 2010, 2009, but like the industry itself, I think the industry really launched around like the end of 2011. So we're approaching within the next year a decade. But there are still a few things that people just kind of like wave their hand and pretend they know what they're talking about, but it's very ambiguous. And if I were to say the two things that are still very confusing and ambiguous for people are mining, which we still cover and it's still confusing, but moreover, just like the infrastructure of trading and OTC. OTC, people are like, yeah, I know what that means, but they have no idea what that means. And realistically speaking, there's like you see the traded volume on exchanges, right? But realistically speaking, the majority, like a huge amount of money is being traded over the counter is what OTC stands for. It's not on exchanges. It's not what people see. It's kind of like this behind the scenes. And then you get this, like these people saying, the institutions are coming. The institutions are coming. Danny, what does that mean? The institutions are coming.
Yeah, no, that's it's funny. I always tell people, like, I feel like the word quote unquote institutions, it's so bastardized because it's such a general term, right? Everyone keeps saying institutions. But if you actually look back, like what actually describes institution, right? Like who is institution? What is institution? And
are you an institution? Am I an institution? Like what?
Exactly.
You need to have 3 employees and a company credit card. Like what's an institution?
Exactly. So like, I think when people say institutions, they mean large size businesses, enterprises, right? And a institution is somebody that has lots of funds behind them that they can get involved with and invest and inject cash with. Right now, that can be usually typically people associate that with a large bank or a pension fund, and that's where people call institutions. But I feel like the institutions have gradually become like molded into like originally it was the big banks, and then now it's becoming the high net worth or the family funds and the family offices. Anyone really that has that big backing of funds. But like I think the problem today is that people really use that very loosely.
I think a majority of our listeners, super majority, including myself, will trade. We'll trade, buy and sell Bitcoin or Ethereum or Litecoin or Ripple or whatever. 99% of them are going to Coinbase. They're going to eToro. They're going to Voyager. They're going to like these apps or these websites where you can onboard with your bank account. Retail, right? Retail, kind of like what I did with BitInstant from 2011 to 2013. These are retail. And then you have like the next level, the people that either are buying from the exchanges directly and then trading. So they're going to Bitfinex, they're going to Bittrex, they're going to, kind of these larger, trading exchanges. And I want you to help me break this down. And then you have like the next level. You have the OTC dealers like Cumberland Mining. You have like Genesis. You have, and I'm just giving off the top of my head. These aren't like I'm just off the top of my head. There are a lot of these OTC. Bitfinex does OTC, and these are people just onboarding accounts and being able to buy large amounts. I know Barry Silbert's fund does a Grayscale does it, and then you have kind of what you do. It's the next level, and what you do is essentially aggregate, and you're a prime dealer. What's a prime dealer? First question. And can you kind of break down what I've been saying and the different ways people buy and sell Bitcoin and the kind of the differences?
Yeah, sure. So as a prime dealer, we take this kind of something similar to the way it's done in the traditional markets as a prime broker, right? Where you are one facility as the main gateway or single point of access, and we help you to easily provide a gateway to the other markets, right? Rather than you having to say open accounts or get access to all these different venues, which can, obviously, I'm sure back in the day where you had to open an account at say IPIT, Mount Gox, everywhere, right? And the fact that you had to send cash, to all these different environments, all these different venues, that part alone was so operationally heavy that by the time you actually try to trade, you only spent about 1% of your time trading and actually 99% of your time managing the operations of it. So a prime dealer model is basically, we act as a single counterparty, giving you that same direct access. However, we're just acting as that middle gateway. So you get to avoid that whole operational hurdle, that whole complication of dealing with each individual venue, but then knowing that you're pretty much getting the same experience as if you were to directly interact with one venue at a time.
I have a question that
Yeah.
I actually didn't prepare, but it's off the top of my head. So, just to give you a little bit of background, in 2011, um, when I launched BitInstant, um, BitInstant was actually, before it sold Bitcoin to people directly, BitInstant was a way for people to fund their exchange account. So, essentially, there was pretty much the majority of trading was going on at Mt. Gox, like 90%. There was like another 10% going on at Trade Hill. So what I did was we had set up our own corporate accounts, and we allowed people to deposit with us. We did the KYC, and then we would fund their accounts on the exchange, basically transferring a balance from our account to their account. And it worked because those exchanges gave us access to say, is this account um, on the exchange like AML'd, because this was a time when exchanges didn't force you to do it, but you would have like higher limits, and it was still very complicated. But I think at one point we were the majority of the way to fund your exchange account because people didn't want to wire money into Japan. People didn't want to wire money at all. But with us, you can deposit with us in the US. And I guess my question is, how do you handle that now with compliance? Do people have to set up their accounts at the exchanges directly? Do they set up an account with you? Do you have agreements with the exchanges? How does that work?
Yeah, so that's funny. I guess you could be back in the day. You're probably the first prime dealer then.
I
um,
guess you can say that. I never
yeah.
thought about that.
Um, but no, so we do the full KYC. We are direct counterparties with the customers, right? So in fact, as we're doing the direct KYC and AML, we're actually selling and buying our own inventory and giving it
Ah,
directly to the customers themselves. So in fact, when customers are interacting with us, their counterparty risk or exchange risk is pretty much removed because we're buying and selling directly with against our own inventory. And then with the exchanges, or any other liquidity provider, we're very transparent, right? We're telling them, look, we're bringing in more liquidity, we're helping with the liquidity side, we're not trying to take away customers, and at the end of the day, it's we help them, they help us, and so forth, right? Because at
what?
the end of the day, it's liquidity is still passing through.
What's your typical trader? I mean, like who? I see the statistic is you have 175,000 global traders on your website. What's your typical person? Is it someone buying and holding? Is it someone trading? Is there a minimum that people have?
Yeah, so it's funny. Like when we first came out, right? When this product was first developed, and this was actually an early idea around 2014, around 2014, 2015. The idea was first.
That was very early. I just want to say, like, 2014, it was very, very much. Most people wouldn't take the risks of starting a business like this in 2014.
100%. And it's funny that the way that this actually came about was my co-founder Akbar. He was actually an early employee of Airbnb, right? And in Airbnb, when they were first starting out, they were trying to figure out how do they pay out, their venues or their customers internationally. And so they were playing around with all the payment methods. And it was actually him and Brian Armstrong that were looking into Bitcoin. And when they were doing this, they were like, holy crap, like Bitcoin is great, but trying to actually use it and buy it is extremely painful. And so during that time, Brian was working on Coinbase. He left and he started doing it, focusing on the the retail guys, and they developed a fantastic product as you see today, right? And then Akbar and a couple of guys were like, you know what? if we want to make Bitcoin, grow that adoption, people talk about regulation, but the big thing is infrastructure. And if you want a business or quote unquote institution to get involved, no one's going to really go and send money into, Mount Gox, Japan, or somewhere in Estonia or something and try to get their funds, because that's basically doing a wire transfer.
Yeah,
So like,
exactly.
right, exactly, right. So they looked at it and they were like, why don't we just make it like what we do, like how they do it today? There is Kayak, there's hotels.com, where they just aggregate everything, create a single point of access and show the best price, make it easy for them to buy it, and then facilitate that process. So that's kind of where the genesis came from. And so that's why, like, back in 2014, 15, like that's kind of where we started. And we were looking into, all right, this is going to be our clientele. We're going to look for the businesses, the payment companies, and start from there. But, things change, right? And the market started growing. We started seeing, a natural progression of people looking at Bitcoin less more of as a payment system, but more so as a speculative product, right? And so, we naturally started looking into funds and family offices and high net worth individuals who just wanted to get in and make sure that, they're getting the best price. Because, when people, I think there was a point where we had one of our original customers came in. They were like, look, we want to buy, I believe it was around like 2 million. Back in the day, I'm talking about 2 million back in 2015. That's a lot, right? And it was funny because when we first had that amount, we were excited, and we went out to one of the brokers or exchanges that's unnamed, and when we asked them like, hey, we want to buy 2 million, literally like a minute later, the price went up, right? So we're like, all right, something's weird here. So we actually developed a different algorithm so that that can help and take care of any large size trades. And so I'm going a little off tangent here.
No, it's okay. I'm
um,
actually writing some questions down that I want to ask you as well.
yeah,
You've brought up some topics that really no one asks. I want to give you an example. So you're the head of growth. You probably are working with a lot of your clients, and I'm going to take an assumption here and assume that a lot of times you'll get family offices or funds who, a board member or whatever says we need to, you know, um, buy into Bitcoin or we need to buy some Bitcoin. And then the person on the ground, let's just say it's the finance manager who's actually tasked with doing this, probably doesn't really have a good education on Bitcoin or crypto, right? So what type of questions do they have for you? Do they come to you and say, hey, listen, like our fund told us to buy $2 million worth of Bitcoin, Ethereum, and Litecoin. Um, what what do I do? Do you get that?
yeah. So they'll actually come in like, what do I do? Like, do I just buy in Coinbase or something? Like, how do I store it? It's still the 101s, right? The guys come in, like the people who are actually involved in the finance guys or something, don't really still know much about Bitcoin. It's just more about, how does the process work? How do I buy it? How do I hold it? How do I store it? Where do I store it? It's all the general information. It's funny. Like, I actually had one high net worth guy come in. He wanted Bitcoin. He's been hearing about it so much, and he was referred to us by another client of ours. And he was like, "Where do I store it?" So I actually had to go on Amazon. I actually bought him a Trezor, mailed it to him, and be like, "This is where you store it. If you're buying this amount of money, you want to hold it, store it yourself." And walk him through the whole entire process, what that is, how it works, and so forth. And it's those are the kind of questions that we get. But then, outside of that, the more technical questions are, like, how do you guys store it? Like, what's the process of it? How do I know I'm getting the best price, and so forth? And those are
How do
kind
you answer these questions? Tell me how you would answer, like, how do you store it? All these questions, like what? Because now you're not only are you the person, the company selling them their crypto, and these are high net worth individuals or companies or funds, but you're also like their trusted person for information. So how do you answer these questions? And are you almost like taken aback by this and say to yourself, I mean, because we're going to get into you in a little bit later. I mean,
of,
you came from banking. You worked at State Street. You worked at BNP. You worked for a few crypto companies before. Are you kind of taken aback and saying to yourself, like, wow, like, um, this is just insane? Because in the stock market world, you can just, anyone can set up their E-Trade account or whatever. You don't really have to deal with custody. Custody was the word custody. The word custody is probably not in any banking handbook because it never was a need that existed, right?
exactly. No, it's funny. Yeah, no, like, the funny thing is, it's like, at first I was taken aback, but then I was kind of happy. Like I think like one of the reasons why I fell in love with it of Bitcoin and everything was just because there was so much natural interest and like the technology of itself, right? And so when people started asking me about this, I kind of came in. I was like, like I actually love it. Like I love walking them through it, the whole process, because it's the fact that they are interested in learning about it, right? Because it's not more of them coming in and calling stuff out and saying this doesn't make any sense. It's more about, wow, this is really interesting. After I explain the process, they're more and more interested about how everything works. And I kind of see it as like an education process. And the fact that you have this interest and this natural organic interest of it, it's phenomenal. It just shows that, there's still a long way for us to go. Right. Like, I mean, it's been about 10 years, but a lot of people, even though it's been all over the media, it's just prevalent that there's still a lot more education and there's still a lot more infrastructure that's needed in this space for it to grow. Because, people think 10 years is a long time, but if for a new technology that's this disruptive and this innovative, we still need a lot more to go. Right.
Can you expand on that? What do you mean by we have a lot more where to go?
So,
Yeah, I definitely said that wrong.
We have a longer way to go. I think I probably said it wrong.
Yes, no, you're correct.
So I think there's, when I mean there's a longer way to go, there's a couple of things. One, it's education, right? This space has moved so quickly in the past 2 years. From 2016, majority of people thought that Bitcoin crypto was a scam. It wasn't going to be here and so forth. And then within 1 year, 2017 to 18, it literally just skyrocketed, right? It went to the moon from going from a couple hundred to, 5 figures. And everyone involved, your grandma, your mother, your sister, everybody, anyone that you knew heard about Bitcoin was all over the space. But then, I don't think the industry was ready for that because we were still building on it. We were, I'm sure if you looked at the exchanges, like back in the day, they were just a simple buy and sell that couldn't, that during that time, they still couldn't even manage that kind of volume of the basic process of buying and selling. And then the fact that during this huge progression of upstream of interest, you had so many more sophisticated investors, so many more sophisticated individuals coming in, trying to build more applications and then getting involved in making like purchases with their high frequency trading and so forth, that, the infrastructure itself still like couldn't meet the demand. And that's why you saw so many exchanges break down during that period, right? And over this time, you start seeing that develop. But then going back to education, like we see so many clients on our space, like retail guys or first time buyers who just heard about Bitcoin or crypto from their friend or their family member, or just heard it over the news and wanted to get exposure. They still, like when I talk to them on a day-to-day basis, because we're trying to build our product, is they still don't understand what Bitcoin is, but they find it as a interesting thing because they've heard that either it's the new internet, or it can make them millions, or it's going to make them rich, whatever it may be, or that they can easily use it to buy a good. And so one of the biggest complaints that I hear on the retail side is that it's so hard. It's still very hard for them to buy and sell crypto. It's still very complicated, even if they use Coinbase, or even if they use blockchain, or whichever wallet they want to use. Like they have to go through a KYC process that they normally don't. You normally don't go through in the traditional market, right? And then when you make a purchase, what do you do with it, right? Like now you have to send out your Bitcoin to a specific wallet, either store it or hold it into your own wallet so that you can use it. And people don't know what that means. And so it's that process of one, educating the people, and then creating a more simplified product that you don't even need, like the idea of not having to think and just being able to buy and sell and use it. That's the goal for, I think, as adoption. That's one area that needs to be worked on. And then for the more institutional adoption, you have pension funds and all these guys who are still interested and want it, but they still can't because one, there's regulation that's still unclarified on the U.S. front, but there's been positive progress on that. The second piece is the infrastructure. Pension funds want to get in, but the custodial side of things, there still isn't a quote unquote approved custodian system, because no one really knows what the actual custodial requirements are. People are taking it based off of what the SEC has said, or the governments have said on what's done traditionally. But if you look at what custody means, it's just the basic definition of custodian is the safekeeping of assets. And traditionally, it's with equities, it's because you have to match the books and records. But in crypto, you don't have that, right? That's all in the ledger. So how do you become a quote unquote qualified custodian? So that's another piece of it. And so like that's I guess that's what I'm kind of going into. It's there's still a lot more infrastructure development where it needs to be very very simple to use, to buy and sell, and then also a clarity on what's right, like what companies can do, what companies can't do, or how it should work in terms of the government side. And I think that's kind of where we are. Where
Do
we're
you do you do you remember the early like blockchain.info slogan? It was be your own bank, right? And do you think people are you think people want to be their own bank? Because that's what you're talking about, like custodializing these assets on your own. You're talking about having to buy someone's Trezor for them, and then you like hand them the Trezor, and I can imagine like their hands are physically open, and you're like, here, this is your custody now. Don't lose this. I mean, if I was new, I start sweating. Like what? Like if I lose this or lose the key to this, my fund loses millions of dollars. Do you think there's like a fear, or there are people who just simply don't want to custodialize their crypto on their own, or they want to have some like counterparty that could be a backstop or a safety?
Yeah, so that's a good question. I think, and I'm deriving this from all the people that, like all the customers that I've spoken to, and just being within the space. It's there are customers or clients who haven't been really involved with crypto, or not even just the banking in general, right? They don't do that many transactions. They don't really use funds. They're basically just buying and selling with a credit card, debit card, or cash. For those guys, being their own bank. It doesn't impact them too much, right? So like because for them it's they just want to make sure that they have their cash when they have what they have, and then when they want to be able to spend it, they can, right? However, if it gets too complicated, they get very worried, and that's something that they don't want to have to deal with. But then there are the guys who are actively using they have their own funds. They're actively using, they know the system of how banks work, sending wire transfers for either their own personal reasons or for business. And I think those guys really, really, those individuals really want to be their own bank. It gives them empowerment and trust of knowing that, if anything happens, they have control over it. They can send it to anywhere without any questions. And most people associate it with, oh, that's negative. No, I mean, if you think about it, like one of the best things about crypto that I actually loved, outside of being completely centralized, was that it's the community, right? If you think about how everyone says like the ICO was crap, which which I agree with. There was a lot of garbage there. But what the ICO market and the crypto market did was it allowed anyone from anywhere to invest into projects or companies that they believed in, right? And without having banks or anybody to stop them, they were able to use their own money the way they wanted to. They thought this company thought was going to be successful, they put money into it. And that kind of made this whole, large world, this global world become a lot smaller. Where before, like investments in Silicon Valley stuff was so privatized and it's a small group, and now it's to everybody. You go to any conference, you have people from all over the world, and so those, I think those are the guys. So those are the individuals who want to be their own bank. They want to be able to use it and spend it, and as people get more familiar with how process works, there are guys who want, or sorry, there are individuals who just want to be their own bank. I think there's always gonna be a need for both, right?
There's a need for both.
Right.
Yes.
People want to be decentralized. People want to be centralized. It all depends on who you are, what you're doing day to day. But I think in this world, there's so many different needs, so many different wants, that this is just part of something that's needed.
Do you get a lot of FOMO? So if the price is increasing very quickly, people come to you and say, "I need to buy more." Do you get people that are FOMOing down if the price is dumping, they want to sell? Or do you get people that are dollar cost averaging in? I mean, give us some insight here. You have insight that most people don't have. Like, what are buyers actually doing? Does FOMO even exist? Are people generally, are your funds, like your first time customers, are they actually concerned about the price? I mean, if they're buying long term?
Yeah. So it's actually so. I think it's so our customers, and I kind of missed this before. It's our customers vary from retail guys to high net worth individuals, family offices to funds, sophisticated traders, and day traders, right? So it's all actually all across the spectrum. And I think every category, every market segment is very, very different in the way they trade because they have their own strategies or the way they have their own behaviors. I would say in the general market, your retail person who just comes in and out buys it. There's a lot of FOMO there, but however, they're not very price sensitive. Everyone,
Really?
yeah, everyone just wants to get in because they've heard it. They want to get in, and you think about it, right? Like, and I'm like, you're surprised, but think about the amount of people who are buying with credit cards or buying through ATMs or paying that 1 to 2% premium on a wallet.
Dude, ATM companies on average are charging between 7 and 15%.
Exactly. And think about people who are buying on credit cards. Your credit cards are charging anywhere from 5 to 15%, or sorry, 5 to 10%. And then you have people who are buying directly on wallets, say like on Coinbase or a blockchain wallet, that's going to charge you about 1 to 3%, right? And for them, it's granted. And actually, I was very surprised because you think about it, it's like you can buy that, or you can just go directly on exchange, which is only charging you 25 to 35 basis points.
People are willing to pay for convenience.
Exactly.
Especially if they think the price is going to increase greatly, and it will. I mean, Bitcoin has to. I want for the sake of this conversation, just because I've been around so long, I use the word Bitcoin and crypto interchangeably, but I'm essentially talking about the same thing. Again, for the sake of this conversation, but people think, and it's true, that the price will just appreciate over time, and to a large extent, it kind of has to, or else it'll fail completely the way it's built. Obviously, volatility will decrease significantly, but I mean over time. But the price will continue having to go on this, with this growth. But it's very interesting what you say, and I've always wondered how some of these companies are able to charge. I own full disclosure, I own a large percentage of an ATM company. We have about 80 ATMs. I'm not directly involved in the company, but I own a percentage of it. And it's very dynamic. So the way the rates work for the companies Byte Federal, the way the rates work is that, it could be as low as 3%. It could be as high as 15%, depending on the demand, depending on how much cash is in that machine, how much Bitcoin is available for inventory. But it's just staggering to see people are willing to pay these premiums just to get, like you said, to get in because they want to be in. They want to be able to tell their friends that they're in and that they own some Bitcoin. They want to feel like they're not missing out. I mean, and you have to understand, it's like my brother-in-law, my mother-in-law, they own, they bought Bitcoin when the price was a few $100. And just to give you an example, I feel like if you're ready for this, and this is going to be very controversial. I feel like the more you're involved in the space, the more short-sighted you are because you're like very involved. My mother-in-law, my brother-in-law, they're not involved in the space at all to any extent where they ask me questions here and there. But their attitude is like, I'm going to buy $500 worth of Bitcoin in 2014, which they did. And now that's worth over $10,000. But they're still not touching it because they're like, $500 will turn into $1 million worth of Bitcoin in 20 years, or it'll turn into nothing. And we're okay with that. That's their mentality. And that's so unbelievable how they're more long-term than me. I'm like, oh, the price is dumping $100 today. Like, shit.
No, it's so funny. Like, you're 100% right. And like, it's funny because maybe it's because we're more jaded from what we've seen in the market, right? But I remember back in the day when I first got in, I was thinking the exact same thing. Like, oh my God, like, eventually I could see this being, worth hundreds of thousands of dollars, or even like just even like a couple of $100. But seeing that we've seeing what's gone through the market and like being so jaded, like we're so much more short-sighted that I kind of miss being able to see or forecast, just that, that crazy amount that we used to think about. You know what I mean?
I completely agree.
eToro is crypto trading made easy. It's one of the largest and smartest trading platforms in the world with extraordinarily low and transparent fees. Join myself and 11 million other traders and create an account at eToro.com. Links in the show notes, and build your crypto portfolio the smart way. As a mining equipment broker, Scott Offord wants to make sure his clients are well informed and making data-backed business decisions. Scott created the only free online tool for calculating profitability and days to ROI for miners. It's a better way to compare the efficiency of various models of ASIC miners and to see how the price of the miner and the efficiency impacts your mining profitability. So, check it out at cryptomining.tools and find Scott on Telegram and Twitter at OFFORDSCOTT. That's OFFORD SCOTT. You started off your career, your adult career, in two very large financial institutions. Everyone knows them, State Street and then BNP Paribas. And then something happened, and I want to know what. But you went on to be part of the early team at ItBit, and I'm very good friends with a lot of the founders of that, with Chuck and with all those guys. And then you went on to Gemini, and you were part of the growth team there, and now SFOX. What happened between the BNP and ItBit year 2014? Like, what switched?
Yeah. So, look, I'm Korean. I grew up in an Asian family. My parents wanted me to, either become a doctor or work in banking, right? And so I knew I didn't have the pedigree to become the mindset to become
basically playing on the whole stereotype.
Yeah, exactly, right. So I went to banking, and I wasn't on the revenue fund making side of things. I was on the back office, middle office side of things. And
what's that?
That is trade booking, reconciliation, seeing all the trades coming through, making sure that all trades are being reconciled properly, the P&L, the risk is managed correctly. So like on a day-to-day basis, we would see what traders are doing, what their exposure is, and making sure that they're not either overexposed or their P&L is in line with what they've projected their P&L to be, their profit and losses to be. And then making sure, when we're doing contracts or agreements with, say, like with BNP Paribas versus, say, Goldman or another counterparty, making sure those terms are correct and matched, right? So that was a completely fun job, fantastic job. But, during that time, one thing that actually struck me was this was during the recession where I had my boss, he was an MD, he was a lifer there. He was working there for about, 25 years. And, during the recession, the first thing the banks did were, they were cutting fat. And, he was, he was a lifer. He had a great salary and everything. And because of that, he had to let him go. And, my parents' mindset was, if you work with a big bank, work with the institution, your job is always safe.
Well, that was like what people worked in car factories thought too, like right. GM and all those things. And what happened in 2008?
Exactly. And exactly like what happened in 2008. And from that point, I was like, wow, like that was like the first trigger. I was like, wow, that seeing that means that I need to be my own boss. I need to come in and make sure that I control my own future.
I give you a completely side story, but don't remember exactly where you are, but you reminded me of an untold story, and thank you for your untold story, but you reminded me of another story. I have a friend who he's like 60 years old, and he's worked at a pretzel factory for 40 years, right? 40 years he's worked at making pretzels, and he working in the factory. And he got sick, and it's a long story of what happened, but it was he got fired, and it was very unavoidable why he got fired. And it was something that just with better communication between the bosses could have clearly been avoided. And I was just kind of like, after 40 years, they don't even give you benefit of the doubt to even just have a conversation and say, hey, what happened here? It was such a simple thing, such a simple, stupid thing. And I was just kind of taken aback by that, and it really pissed me off. But yeah, go back to what you were saying.
Yeah. But no, that's exactly it. Like that actually pissed me off as well. And where was I? And so that was the first trigger. And I was thinking, all right, well, that's the one thing. So I need to start thinking about stuff. And I, banking or being in the back office is very cyclical work. You're doing the same thing over and over again. So I was looking into the market. This is around 2008, 2009. I was like, what could I do? I was looking at the e-commerce site was blowing up, like Etsy with the, making a community so that you can facilitate buying and selling of independent designer goods and so forth was becoming very popular. And I was in New York. So my time, one of my close buddies, he was starting his fashion design company, his product line. And I was talking to him, and I was like, like, why don't you guys have a website? Like, why don't you do this and that? And he's like, it's hard. Like we're fashion designers. It's hard to make money. And we got to build a community website that's all costs money. So my buddy and I came up with the idea, like, why don't we just create a website kind of like Etsy, where we focus on independent high-end fashion designers in New York, or boutique designers, create a website, payment channel, and all of that. And so that was the first piece. And that was second trigger. So we started working on that while I was working on my day job. And then as we were building this, I think the biggest pain point that I heard to everybody was chargebacks. Because I was asking everybody, like, what's the pain point? Like, what's the biggest issue outside of building a website and everything? They were like, payment channels. Like, we use credit cards, we use debit cards and so forth. And I actually never knew this until I spoke with these people. They said that, once you make a purchase as a merchant, you're at risk at twice
chargebacks and everything. Yeah.
Yeah. And for those people who don't know what chargebacks are, is when you buy something with a credit card and you say, you didn't authorize this is what happens. The merchant has to pay back the credit card, and then the merchant also lose out on the goods, right? So it's a double loss for them. And trying to figure that was the biggest thing. And I figured, years of the financial world being around there has to be a solution that people just didn't look into. And to my surprise, there wasn't, right? No one was figuring out the solution. People were it was just part of that cost of goods sold. And that was so surprising. So I just kept diving more and more into it. And then somehow, or I forget how, but I guess I was like walking down somewhere, and I saw Wired, and the cover, I believe, was an article about Bitcoin. And I was like, what is this? I started reading more about it, and I was talking about payments and everything. And that's how
It was probably an article talking about the death of Bitcoin, because that's all they do is talk about the death of Bitcoin.
It probably was. And then I always like to look at the glass half full. And so I saw that, and I was like, man, this is game changing, right? And from there, I started looking more into it, started seeing, all right, I was like, all right, this is pretty damn cool. So I started looking around, seeing, like who's involved, or, how I could get involved. And I actually started looking into Coinbase. And I remember I was so discouraged because I don't have a technical background. And I remember like the hirings that are being done at Coinbase, where it's all technical. There's all engineers. So I was figuring out, how do I get, what do I do? How do I get this? So I was like, all right, you know what? Let me just buy Bitcoin first. So I started buying Bitcoin and so forth. And then it turned out that, one of my in my group of friends, her boyfriend, or now husband, was Bobby Cho, who's, the ex-head of.
Oh yeah, I love Bobby.
Yeah. So Bobby and I are very close. But it turned out that he was in second market. He was, trading OTC and everything. And he was, transitioning over to IPIT. And he was like, hey man, like, we were in Vegas, we were talking about, for our bachelor party, and we were talking about Bitcoin. And he was like, hey man, yeah, he's like, I'm actually moving to a company called IPIT. They're headquartered in Singapore, but they're coming to the US. I was like, perfect. I'm gonna hound this guy so that I could get a job or something.
Wow, that's crazy.
Yeah. And then so everything like kind of worked out, and then like a couple of weeks later, he reaches out. He's like, hey man, we're actually, looking for somebody in operations, because we were trying to move the headquarters out from Singapore to the US. You're interested? And I was like, 100%. And he sent me the job description. The first thing he sent me was a job link to on Craigslist. And coming from coming from that traditional background, you're like, this is shady as hell, right? Where do you get it?
Was it an ItBit Craigslist? Oh my god!
Exactly, right. And then but he's like, dude, he's like, look, he's like, meet the guys, meet Chad, meet Emil, meet Andrew. They're great dudes. I go in there. I
really like Emil.
Dude, I still talk to Emil. Every time I come back to New York, we always catch up. Phenomenal guy. Great heart, and beautiful family. But anyway, we go back. I go talk to them. I love the vision of what they were doing. And before I even got an offer, after that conversation, I went back to work, went into my executive MD's office, knocked on his door, like, hey, man.
What was that conversation like? I want to know.
Well, which conversation? With my...
telling your boss that you're leaving for a crypto company.
Oh, my gosh. So I knock on the door. I'm like, hey, I just want to let you know that this is my, this is my notice of resignation. He's like, where are you going? Because he's like, you're on a fast track right now. And I'm like, look, frankly, the banking world is fantastic, but
Yeah,
there's
don't lie to him.
and I was like, there's this thing called Bitcoin and blockchain, and this is going to be the future. This is the next thing. Um, and I actually started pitching him on what Bitcoin and blockchain was,
And
right?
this was like 2014, right?
Yeah.
If you probably said that now, they wouldn't look at you like you're crazy, or maybe they still kind of do. But I mean, 2014, that was like, I remember 2014. If you would have told your boss that, they would think you're crazy. But I want to hear what what the conversation was like with your parents too.
Yeah. So here's what's surprising. My boss, I expected him to be very shocked or just like disapproving it. But he was as I was talking to him about it and teaching him, he was like, "Wow." He's like, "Normally, I would say people are making a poor mistake going on this fast track, but from the way you explained it and from the passion I could see, he was like, you got to do it. You're still young. It seems like it's an interesting, innovative product, and if it's going to compete with the financial industry, it may be worthwhile." And he was like, "Good luck." I was like, "That's awesome." So that kind of gave me a lot more confidence, right? Now, that's a whole different story compared to talking to my parents who are more traditional. These guys are my parents are the ones, they want to become a doctor or a stereotypical, doctor or going to banking and so forth. And I'm talking to them about that. And they're like, what the hell are you doing? Like, you are giving up a secure job. Um, you're making very great money. And now they're like, how much are you making? I was like, all right, I'm taking a discount. Like I'm working for less. And I was like, but this is the future. You got to understand, like, this is a startup that's working on the next big thing. This whole technology is going to be as big as the internet. Keep in mind, my parents, you know, can't, they don't speak English fluently, and it's broken English, and I don't speak Korean fluently. So me trying to even explain it, it's probably being translated 10 times worse, 100 times worse. And so, I told my parents, I'm like, look, like, you got to trust me on this one thing. And I go to my dad. My dad, who was an immigrant, handicapped, was pretty much didn't have anything, came here to the U.S. with nobody, with literally a couple of dollars, and he took so many risks in his life and became very successful. So I kind of like went into that story. I told my dad, I was like, look, imagine this was the same situation for you. You took a big risk and to build a bigger future for your family and your friends. You saw a big opportunity, and my dad's success was seeing the pagers and cell phones. He was the first one to come in and build a whole pager business and telecom business all across the tri-state of New York, all from seeing this one article as well. And I kind of just told him the same story. I was like, look, like Dad, or Appa in Korean is dad, and I was like, Appa, this is the beeper of today. It's going to change the world. And so he still didn't understand it, but he kind of saw the same thing. He was like, look, all right, I took that risk. I can't be a hypocrite, but I'll trust you. My mom was losing hair, getting hurt. She was growing gray hair just because of all the things I was telling her. And every single day, literally, she'd be like, how's everything? Is everything okay? Is the business okay? Do you still have a job? I'm like, Ma, don't worry. I got it. I saved it. Don't worry about it. And if anything, you love living with me, so I'll go back home and live with you guys. And then, funny enough, like, they never knew what I was doing so I joined ItBit 2014-15. During that time until 2017, they had no idea what I was doing. When their Korean families love to talk, or any family loves to talk about other how their kids are doing and so forth. They could never describe what I was doing. And then when 2017 happened, I was their golden child, man.
Oh yeah, there we go.
Yeah. And they were like, oh yeah, my son is in blockchain, my son is Bitcoin, da 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 da. And then like that's how the conversation went. And today, and then obviously, like, they have more FOMO than I do now, right? Like, when they see the price go down, they're like, are you okay? Are you okay? I'm like, it's okay. This is part of the industry. Don't worry about it. But that's how it was, man.
Let's talk about that bear market for a second. There were a lot of billions of dollars worth of ICOs that raised money. Did they come to you with needing help on how to like hedge and make sure they don't actually lose the value? Do people come to you? Do you get customers like that as well? Like, hey, how do I hedge my losses here? How do I make sure that I don't lose so much value? Do people come and ask you those questions?
Yeah, so we actually had a lot of ICOs come to us. Now we didn't take on a lot of ICOs just because for us compliance is a big thing.
The
We didn't know,
ambiguity, yeah, of
yeah, and the
course.
ambiguity of it, and so we didn't want to be too involved with if it was completely shady, if it was completely ambiguous, like you didn't know what the company was doing, we didn't really take them on. So we were very selective on knowing which companies we could and couldn't work with, and we really wouldn't, we would advise them that, we're not providing any financial advice or advisory services or anything because we're purely just an execution venue. But we would walk them through on, educating them on, how the market looks or like, how you can trade, right? Because again, like I think you mentioned this early in the conversation is, there are so many different ways to trade, but people don't know how to trade. People immediately think OTC or buying and selling on an exchange, but each of those has an impact on the market or to the price itself. And so we were kind of walking them through like, here's what the landscape looks like, and and that's kind of how we walked them through it. We didn't really tell them like, oh, you guys should hedge right now, you guys should buy now or sell later. We just really educated them on how the industry works, of how trading works, what venues you can use, what options there are, how we operate, and then taught them how to do that. And so because of that, we had a lot of clients, not just ICOs, but other guys who were trading large sums, using our systems. And we told them like, look, we have a lot of partners on exchanges and OTC side. If depending on what their need is and understanding their need, we would actually recommend them going to a Circle or Cumberland or one of those guys because that's what they need. Or if they're playing a smaller amount, then maybe go directly to an exchange. So I always spoke to them on understanding what they needed, and then kind of gave them just the landscape. And so the way I kind of went with the conversation was there's really generally three main markets, right? You have the exchange side where there's actually four. If you want to immediately buy and sell, don't care about the price, just want it, people buy it conveniently through their wallets, right? Or through the ATMs. Then there's the exchange. If you want to buy and sell and try to actively day trade, you can do it on an exchange, but then you also need to make sure that whichever exchange you're comfortable with, knowing what that process is, or if you're planning to do it on every other exchange, knowing every single process. And then if you want to go OTC, there's always a need to go to OTC because you want to get a fixed price, you want to get in and out. Granted, you're going to be paying for that service, right? There is a premium or a spread that you have to pay because the way OTC operates is they're taking on that risk, or they're brokering it and making sure that they're covered. So
Walk me through it. Sorry to interrupt you, but walk
yeah,
me through a typical OTC deal. A lot of people don't really understand how that works or what really is involved. Assume that both clients are onboarded. Um, Someone wants to come buy or sell. How does actually that work, like step by step?
yeah, sure. And this is more high level, right? So not
Okay, of course.
stuff. So generally, when you get onboarded with a OTC broker, let's say you go OTC broker like Cumberland or somebody, you sign up, and then you tell them how much you're looking to buy. When you're first onboarding, you generally give them a sense of what your volume is like, and what your background is, what your source of funds is, and so forth. So let's say I'm coming in, I'm a high net worth individual, and I'm looking to buy 250,000 to 500,000 weekly or bi-monthly, and you pre-tell them that. From there, when you're ready to trade, so your account will be completely set up, approved, and ready to go. They'll ask you for your banking information so that they have it on file, and your crypto address, and that's typically whitelisted so that they make sure that there's no errors and it's always going to the same address. And then so now when you let's say you were ready to trade, you'll go in saying, look, I'm looking to buy $500,000 worth of Bitcoin. They'll give you a price, and then you can either accept it or negotiate it. And saying that's too high, they'll come down. Now, on the OTC side of things, the company themselves that are providing that rates, they're looking back onto their own inventory. They're looking back onto what their risk levels are, how much exposure they have, and then looking across also the prices across all the markets, right? Seeing how much liquidity is available, how much could they offset directly if they were to buy that position, because for them, it trading is a it's a zero sum game, right? There's always going to be a winner and a loser, and so for them, it's looking at, all right, well, if I make this trade, how am I going to offset any losses, or how am I going to make more money? And so they're looking at across all the liquidity providers that they're connected to, either other OTC providers or the exchanges, and then based on that information, as well as what their current exposure inventory is, they'll provide a price, because OTC providers are who are trading principally, they're building up a position. They know what the average cost is. They know what their risk levels are, how much they're holding, and so forth. And then they're also seeing how much they can offload. And so when a investor or a purchaser comes in, that's when they're able to provide a price. And then a trader and the OTC provider will go back and forth and negotiate.
What about escrow? Is there one person that always will send first, like the buyer or the seller? Is it the wire transfer can go first because that can be reversed? How does trust work?
Yeah, so for trust, I mean, typically, if as an investor, so if you're working directly with a counterparty, say a liquidity provider like Cumberland or those guys, you're sending in the funds first. You'll agree to the price, but you'll send the wire in first, and then in return they will send over the funds. Because for
how
them,
long do they typically wait to like lock in the price? Do you have to prove that you sent the wire instantly?
so they'll tip. I mean, I think every company varies, right? Typically, you have a short period of time to send in the wire, right? And it's based on credit, right? So
Yeah, of course.
so if you agree on a price, you're expected to settle. If you don't settle and miss the mark, one, that's costing the company. So you're basically getting blacklisted, and the community talks, right? So you won't be a valid trader in other venues as well. So it's a risk for the customer not to settle, right? And so at first it really starts as a trust game, making sure that they will pay up or not.
And
yeah.
Sorry.
No, so once it is settled, then the OTC provider will then send over the crypto, and then that's it.
It's very
And then
interesting how that works.
you'll get a confirmation, and you'll see all that information.
It definitely changed. I remember OTC deals. I mean, the prices were a lot lower, but I mean, escrow would be basically done with like people on the Bitcoin Talk forums. So people would agree to a price, then they paid someone who was trusted third party to like escrow the funds for them, and that's how it was done. It's crazy how the world changed so much. But speaking of of escrow and about how these transactions work, you have companies like Quadriga, and you have Cryptsy, and you have a lot of these exchanges that went bust and disappeared, whether they were hacks or exit scams or whatever. And the common denominator is segregated accounts. Can you talk a little bit about what that means and what you guys do differently?
Yeah, sure. So most companies, most companies with banks, what they'll hold is a omnibus account, right? And an omnibus account is basically a pool of funds that's representative or holding all customer funds. So think of it as, one wallet that's holding multiple customers' information, funds, and all that is being segregated based on a database on a ledger system, right? Segregation, however, is meaning that when a customer sends in funds, it's only their funds into one account. It's no longer commingled in a pool of funds. And the reason why that's valuable is because in the event that, let's use Quadriga, right? That was an event that was where all funds are being held in the omnibus level. And so when auditors are coming in, what they're trying to do is reconcile is, all right, who is owed how much? And what they have to do is reconcile all the books and records of funds going in, and then matching it with what the database has, right? So then they're trying to see, all right, well, this bank account has 500,000. Then this record shows that they have 2,000. That means that we need to pull 2,000 from that 500,000 funds, right? And it's a very manual process, and it's as things as you have more funds or more transactions getting involved, that thing can explode and get a lot more complicated. Typically, though, people have back office systems. That's why back office exists, to make sure that everything's reconciled, so that the books and entries are labeled and it's there. However, a more sophisticated or cleaner version is is a segregated account level, and that's what most trust companies do. Where when you send in funds, it's being held into your own account on a separate level, and so that exactly how much not only as a company knows how much the customer has, but on the bank level, the bank knows this customer has this much, so that in an auditor comes, they're not just going based off of the books and records of the company, but then they can also go to the bank and see what those books and records are, and then make sure those match. So it gives you a more defined line and security for funds for the customer.
So basically, it's auditable, right? So you're able to audit. Why are things like um, Tether so hard to audit?
Yeah, I think with so yeah, right. So it's to make it more auditable, right? And I think I think with Tether, I mean, it's hard to say, right? Because like I don't really know how their
I think
back
no
office.
one really
No one
knows.
really
That's the
knows, right? And
problem.
I guess that's the question. People have been looking into it, but whatever it may be, I think it's just the fact that there isn't a really, I would say that because I would say one reason is because there's no segregated accounts. There's no way to see. I can't call the bank and say how much does Tether own of my funds, right, or where that is. With the segregated account, you can. You can say, hey, my name is Danny Kim. I have an account with SFOX. Can you confirm what my amount is? And that's kind of what it is.
Very interesting, because I think that's like the biggest problem with the crypto today is people are still constantly worried about transparency. In a world where we have transparency, you don't really have transparency.
Right.
What's
And I think that's
what
kind of the reason why people like to do the self banking, right? Because that transparency gives them control of their own funds, and they get to know, like, all right, this is how much I have.
what's the future? I mean, where do you see the company? Where do you see how the bridge between traditional fiat and crypto evolving for the better?
Yeah, I mean, so I think that well, for our company or the company itself, we see ourselves growing more and more, adding in more infrastructure tools to make the market more transparent, right? Like one thing, we first made it transparent with the exchanges by knowing, going from one single platform, you can see literally all the prices from across all the major exchanges. We also just started aggregating all the time of sales. So, you can see from one screen every single trade that's being done on an aggregated level from Coinbase, Itbit, Gemini, Bitstamp, and so forth from one screen. So it's a transparency that we're trying to create, and we're also we're planning to do that for the OTC market, right? We want to aggregate all the OTC electronic providers into one platform so that customers no longer, like, there's really no edge given to other people who are more sophisticated. It's pretty much equal playing field, so that you get full discovery on prices and venues and products for crypto. That's kind of where we're seeing ourselves doing. Like, we want to grow this market so that if by making this transparent and making it more open for financial assets, it's helping growing that community, and that's where more individuals, investments, products, and so forth will get involved. Um, and so we kind of see that more changing, that financial asset or financial assets changing, because you kind of see that decentralized finance is becoming a big thing too, right? That's kind of leading into being able to, you know, again, going back to the whole theme of being able to control your own funds, or you know, not having to worry or rely on a a third party, or a single point, or centralized counterparty. And I think kind of that's where we see the market going. Where that's, at least, at the very least, that's where I see the market going. Where we're going to see more digital assets coming out. It's going to be a little bit more streamlined, but it's going to take some time. We're going to see. Yeah, I'm kind of all over the place right now, but
No,
that's
you're right. I agree with you. I agree with you. I think the world is continuing to evolve, and crypto is getting better and more transparent and streamlined over time because
yeah.
the market demands it.
Yeah, exactly. I think the hardest part, and the reason why I'm a little flustered about this, is because what what I realized is that crypto is great for use in U.S. for a certain reason, right? People like it for speculative products or to pay for goods or something.
Yep.
But in other areas of the world, it's being used completely differently. People are using it, like people who are unbanked aren't actually using this as a banking facility, right? People are actually, so it's so hard to know where the market's going to go, because the beauty of crypto or Bitcoin is that it can be used in so many different ways. But you're also seeing, like, as the market or the world evolves, it's hard to predict where it's going to go because it's being used so many different ways. And that's why I find it, like, that's why I find it one of the hardest questions to answer.
That's a very good point, and we tend to forget that in the U.S. we use crypto as more of a speculative asset. We trade it, speculate on it. We do use it, but in the rest of the world, it's actually being used for one of its early, I'm not going to say intended purposes, because that's not really a good thing to use, but it's for its utilities, and that's a very good point. Do you have any last thoughts before we end the show?
Um, yeah, I think that, I think what people, my thinking is that, I think that the market, for the market to grow, we're going to go back to knowing that there needs to be a better infrastructure. And I'm going back to the main point of, you asking me, you know, how long, like, where does where does crypto need to go in order for it to grow? I think, again, it's the infrastructure of ease of access. The more and more people I talk to, the more and more people you speak with, you gotta, you have to trust and enjoy your experience with crypto. And, one thing that I'm always surprised about is when you're interacting with the platforms is, it's customer support or customer experience, right? It's so hard to really
It
interact.
is. It's very difficult.
It's very difficult. And it's always so surprising, right? Because in a new product or something so complicated and innovative like crypto or Bitcoin, you would want to you'd want the customer or that experience to be trusted, right? Because you're sending your money into a venue that you don't know what's going to happen. And so I kind of hope, and that's kind of one of our main focus is really being customer centric and, reaching out and speaking to these customers, because that if customers have a bad experience, then that's gonna impact the market. And so, the more and more people are getting involved in educating and helping customers out, or any interested parties, that's going to naturally help the community grow. So that's my final last.
Danny Kim, head of growth at SFOX, SFOX.com, formerly part of the growth team at ItBit and Gemini. Thank you so much for coming on the show. I really appreciate it.
Thank you for having me, Charlie. Really appreciate it as well.
Hey everyone, thanks for listening. This episode of Untold Stories is sponsored by Scott Offord, the creator of crypto mining. Scott's a broker of ASIC mining gear and helps people buy and sell their miners. He created a Bitcoin mining profitability calculator and an interactive ASIC hardware comparison chart that you can find at cryptomining.tools. It's the only free online tool for calculating profitability and days to ROI. That includes the impact of the Bitcoin block reward halving. The calculator lets you put in your estimated uptime to give you a more realistic profit projections. So check it out and find Scott on Telegram and Twitter at OFFORDSCOTT. New episodes go live every Tuesday at 7 a.m. EST. Links to our Apple and Spotify channels are in the show notes. You can also follow me on Twitter, Charlie Shrem, to continue the conversation. See you next week.